The diplomatic relationship between Canada and China appears to be on the mend after years of strain and a more recent escalation in trade tensions.
Canada hopes for relief on steel and aluminum tariffs. U.S. Commerce Secretary Howard Lutnick is reportedly rejecting any possibility of a deal on the auto sector.
It's the start of a process of recalibrating the relationship with China. It's very important that we reopen dialogue with the Chinese authorities. They are our second largest trading partner, the second largest trading partner for Canada.
It began with subtle shifts few noticed outside policy circles. As Washington escalated tariffs and warnings against Canada's auto sector, Beijing stepped in with a different approach, offering to ease restrictions on Canadian crops, open markets for energy and minerals, and explore partnerships in electric vehicles. For decades, Canada's trade aligned with the U.S., with nearly 3/4 of its exports heading south. But as the Trump administration imposed new duties on metals, furniture, and vehicles, Ottawa recognized the risk of over-reliance on one partner. Instead of confrontation, Canada sought opportunities elsewhere. Could America's pressure push Canada toward China's orbit? By early October, tensions between Washington and Ottawa peaked. At a Toronto trade summit, U.S. Commerce Secretary Howard Lutnick declared vehicle production would prioritize America first, Canada second. Backed by a looming 25% tariff on Canadian cars and parts, the statement hit hard in Ontario, Canada's auto hub, where 500,000 jobs depend on a supply chain tied to Michigan, Ohio, and Illinois. Half of every Canadian-assembled car's components come from the U.S., but the tariff threat risked unraveling this integration. Lutnick's words sparked investor concerns. Ottawa's trade analysts warned that the tariffs could slash billions from auto exports and trigger layoffs in steel, aluminum, and manufacturing. U.S. experts admitted the move would raise costs for American automakers. Yet Trump's administration insisted production shift to U.S. soil, regardless of the fallout. This moment prompted Canada to rethink its trade strategy. For years, Canada followed Washington's lead, supporting tariffs on Chinese electric vehicles. But instead of gratitude, it faced penalties. Trump's economic nationalism framed trade as a zero-sum game, leaving little room for allies. As Washington raised barriers, Beijing seized the opportunity. China signaled openness to dialogue, proposing relaxed agricultural import rules and collaboration in clean energy tech. For Canada, still facing China's canola tariffs, this was significant. Beijing's offer was clear. Canada could open its market to Chinese EVs, priced between $35,000 and $40,000 Canadian dollars, and China would ease farm export limits. This promised affordable EVs for Canadians and a vast market for farmers. With the U.S. blocking Chinese EVs via 100% tariffs, Beijing's timing capitalized on Canada's frustration. Ottawa saw both opportunity and risk. Diversifying trade could strengthen its economy and signal that loyalty to the U.S. couldn't compromise stability. China wasn't replacing the U.S., but it offered a choice Washington had undermined. By mid-October, Canada's pivot took shape. Prime Minister Mark Carney's government unveiled funding for manufacturing, steel, and energy. The Finance Ministry launched programs to shield industries from U.S. tariffs, and Ontario Premier Doug Ford pushed for auto worker protections. Canada's tone toward Washington remained diplomatic but firm, easing some retaliatory tariffs to foster talks while maintaining a 25% duty on U.S. vehicles. The message was clear: Canada would negotiate but not yield. Officials called this sectoral resilience, pursuing targeted partnerships in steel, aluminum, agriculture, and EVs with various nations. China's overtures aligned perfectly. Canadian EV and battery suppliers eyed Asian markets, while Chinese firms sought Ontario's nickel and lithium. The approach was pragmatic, not defiant, fostering mutual gains. Diplomats described it as building a network of equals. Trump's tariffs, meant to protect U.S. industry, backfired. U.S. Commerce Department data showed steel and aluminum costs up nearly 20% since early 2025. Auto prices rose, profits shrank, and production slowed in Great Lakes states. The Federal Reserve Bank of Chicago estimated a 10% tariff hike cut Midwest manufacturing output by 2%. Washington's approach strained alliances. Canada's engagement with China showed the U.S. could no longer assume its neighbor's dependence. By tightening its grip, America weakened its influence. Ottawa's moves were adaptive, not rebellious, diversifying markets to bolster independence. Exports to Asia are rising, and trade talks with China progress. Canada is learning economic survival cannot hinge on one partner. Trump's tactics reveal that threats don't sustain influence. While Washington measures strength in tariffs, Canada measures it in flexibility. If Ottawa's ties with Beijing deepen, the U.S. risks losing trust that once defined its leadership. Canada's diplomacy shows how nations can protect interests without confrontation. Can the U.S. sustain a policy built on conflict, or will it stand alone as allies forge new paths?